going to talk about data, which is going to be super exciting. Well, first of all, I have really great panelists here. We're going to do a bit of a different start to this whole thing, but a few words about myself. I'm Hilary Rand. My own expertise is in the F&B space, but I do also a lot of moderating and content curation for events. So very happy to be here on Andrew's invitation, and I'll be doing the community one later as well. And my colleague Mikkel has joined me for today. So data, the impact of information on asset class appeal. Data is everywhere around us, but the question is how do we interpret it? And we're going to talk a little bit about that. First, we're going to go through a few slides, quick and snappy. The three gentlemen here to my left will take us through what is their data that they're looking at on a daily basis, and then we're going to jump into a discussion. So, Eduardo, why don't you do a quick intro of yourself and run through some of your slides?
Sure. So, my name is Eduardo Gili. I'm a senior analyst at Green Street. What do we do at Green Street? Very simply, we like to look at data and inform us on what the return expectations should be across real estate asset classes. So we cover the major food groups, retail, industrial, residential, office, but we also cover what we call alternative asset classes. So that includes healthcare, hotels, data centers, everything that's more operational. And if we had to separate, the two types of data that we cover and we analyze and we spend some time on, it's really operating fundamentals. So where are we with demand, supply, property level data? What is it telling us? How can we forecast cash flow on the back of that? And then we really like to look at valuation data as well. So what is the listed market telling us? Equity side, debt side, what is the credit pricing, in real time? But also we look at cap rates, private market data. How do we get it? How do we clean it? How do we present it? And how can we inform, our investment decisions or your investment decisions with that data?
Can you click the next one? I think you had. There we go. Thomas.
Okay. Well, I'm going to stand up because it feels a bit odd presenting slides from a seated position. I'm going to talk to you about STR and the hotel industry. Hopefully, most of you are aware, but what do we bring to the hotel industry? Well, as this slide says, we are the global leaders in hospitality data benchmarking, analytics, and marketplace insights. And in 2019, we were acquired by the CoStar Group, who look at commercial real estate asset classes across the board. And the combination of STR's wealth of data and the technological brilliance of the CoStar Group has led us to launch our recent new benchmarking solution, which is absolutely a best-in-class benchmarking platform which allows owners, brands, operators to understand, of course, their performance versus their competitors. Just a couple of power numbers about us. So nearly 40 years in the industry now, 83,500 hotels submitting their data to us on a daily, weekly and monthly basis, nearly 11 million rooms, and that's 78% of all globally branded hotels or 50% of all hotel rooms globally submitting their data to STR. And that allows us to slice and dice that data in all sorts of ways. 2,500 sub-markets around the world we report on, and within those sub-markets, we break down nearly 7,500 cuts of data from a class perspective. So enormous amounts of information available. And we are truly global, something we're very, very proud of. The darker the shade of green there, the stronger the level of participation. But you can see there, we work in over 190 countries across the globe. And what data do we collect? Well, at the heart of it, it's actually very simple. 3 numbers: rooms available, so supply, rooms sold, demand, and then net rooms revenue. And then with those 3 numbers, you can calculate occupancy and average rate, and bring that together to have RevPAR, which is still the key hotel industry metric. But on top of that, we have a full database of existing and future supply. We collect business on the books data. We go right down to P&L, GoPAR data, as well as forecasting performance across markets around the world. And then really important in terms of what we do, data security, confidentiality of data, non-negotiable from our perspective, and consistent data reporting guidelines. Everybody reports the same data to the same rules, so you can compare apples with apples. And with this, I'll pass over
to Richard.
Thank you all. Thanks.
Thanks, Thomas. So my name is Richard Ward. I'm Head of Research at Students. I'm going to keep this really quick and brief. In terms of who we are, so we operate the UK's largest listings platform for student accommodation, students.com. We are also a leading provider of property management software to the sector, and those two platforms allow us to provide highly granular, proprietary, independent data to the market from a student perspective. In terms of the current stand in the UK market, there are various data providers in the sector, but because of that, there are still lots of conflicting messages in the sector. There are still questions around data independence. Various different stakeholders who provide data into the market sometimes do have conflicts of interest, and that still is an issue. And what that means is there are both opportunities as well as threats in relation to information asymmetry. Some investors have the information, some do not, and that obviously, again, creates opportunities and risks. In terms of the UK market, I want to just chuck a few interesting charts in here to give you some value. This is the UK market outside of London and how supply and demand growth has been changing over time. In short, the blue lines are demand, the orange line is supply, and going forward, demand growth looks highly likely to outstrip supply growth. Having said that, there are big differences between individual locations. We focus on Coventry. Anyone familiar with the student market understands Coventry is a challenging city at the moment. The left-hand side chart is how I would probably classify traditional stakeholders would look at the sector. The blue dot is quite simply demand, the bar is supply. On face value, Coventry looks undersupplied. The right-hand side, which is typically how we would assess markets, which is a lot more independent and critical, the orange dot is quite clearly much lower than the bar, which is supply, and that suggests the complete opposite of a market that is potentially oversupplied. So depending on what data you're using, you can get very different results. On that same point, this particular slide looks at booking velocity in PBSA over time, just for a handful of locations. And you can really see the stark difference in performance between those cities. So City 5 in this case, which is actually Glasgow, for anyone interested, is letting or has let a lot quicker than other locations. The bottom line on that chart, Coventry, out of interest, is a lot slower. So whilst nationally the performance is very good, individual city performance can vary significantly. Hopefully there's some interesting stats in there. Anyone wants to find more information, do reach out.
Thanks so much. And we also have Alexei here on the panel. You're at the receiving end of the data, so why don't you give a short introduction of yourself as well?
Good morning, everyone. My name is Alexei Zhagovsky, and I'm from AEW, and I work for research and strategy. And AEW is a large property investor management.
Excellent. So before we dive into questions, I have a statement for each one of you. You can either agree, disagree, or give me a one, if you really need to, one-sentence answer. Thomas, let's start with you. In the hotel sector, we have not yet reached the depth of data, but we are fairly close.
Agree.
Eduardo, I would agree that Europe would reach the level of US data sophistication in the alternative real estate sector in the next 5 years.
Disagree. I would say probably the next 10.
Got it. Richard, you need to fill in a blank. Our next area of data-driven research is?
In student, I would say booking velocity, which we've touched on.
Excellent. And Alexei, lack of data on emerging sectors gives opportunities to investors.
Agree.
Excellent. So, a couple of questions now. We've seen hotel sector getting, really into the depths of it, very, very advanced. Student sector, you guys have great proprietary data and providing really good reports on that. So let's talk in terms of the quality. And a question to you, Eduardo, first. Which asset class faces the most challenges and why? Because you look at a sort of a broader perspective, and same to you, Alexei.
I would say most alternative asset classes, especially in Europe, there's a massive gap in terms of needs versus what's available out there. I would say hotel is one of the most supply. STR does fantastic work there. I would say healthcare, we're nowhere near where the US is. If I think about care homes, if I think about occupancy, getting that data on a granular level, so not even property level data, but I'm just talking market level data.
Yeah.
Getting that data in real time, or even with a couple of quarters lag, is just very difficult to get because transparency is not there. I would say we're probably the major asset classes in real estate is very supplied in terms of data. If I had to, sort of do an analogy versus the traditional asset class versus the operational and alternative asset classes, we're probably 20 years behind, except for probably the hotel space. Yeah.
Alexei, what's your view on it?
I think that in general, property industry is kind of data restricted if you compare to traditional asset classes. But if we talk about just property, yeah, I would say hotel is getting more and more traditional in a way. Then I would say student accommodation and followed by healthcare and accommodation.
So very much agree with Eduardo's viewpoint. In terms of what are the main challenges faced in collecting that sort of data in the asset classes and how they can be overcome? Like, for example, maybe you can tell a bit on the student accommodation side, because you've gotten quite sophisticated on that front in what you do. But how are you collecting it? How are you managing it?
Yeah. So I guess in terms of StuRents and our PMS brand Concurrent, as you've touched on, we're able to generate proprietary data based off activity on that platform, so that's pretty unique. If you go beyond that, obviously there are other data sets that we use, so planning is one, obviously data directly from the likes of UCAS and HESA, but there are big challenges for those. HESA, particularly at the moment, has a huge time delay between what is actually happening in the market and how delayed that data is. And that partly comes down to the ability of universities to record accurately and quickly, which is a big challenge. So that is a massive piece of the puzzle that is missing, and that really means that investors don't really have up-to-date demand data covering all institutions in the UK, and it's very hard to get. So that is certainly a challenge. I think on the planning side, again, that's something that we track actively, but to be honest, that's a bit of a mess. Each individual council can have their own platform. There's no centralised government database for planning, which seems like an obvious one. But that means trying to get, again, timely data covering future supply is not easy. But then that makes the data valuable because it's not easy for participants to go out and get them themselves. So, yeah, certainly some challenges. And we're nowhere near the US, as you touched on at the moment.
And on the hotel side, Thomas, because you're obviously working with benchmark data, what are some of the challenges you're facing in collecting that? It's become much more sophisticated in the last 10 years as we spoke, but I'm sure there are also some challenges within that.
Yeah, I think the biggest challenges remain with trust in some respects and education in terms of what to do with the data. Now, I guess in the hotel industry, although it's still a very fragmented industry compared to many, we do have a number of significant brands and companies. But when we're talking to independent hotels, mum and pups, smaller brands as well, the trust element, providing their proprietary data effectively to a third party, I think there's concern around there. And then ultimately, if they do, what do they then do with that data once they get it back? They may well be just working with a OTA and putting all their eggs in one basket. And actually, the revenue management side of things, I think, is still something that we've certainly put a lot of effort into to try and educate the sector in terms of the benefits, because ultimately using that data correctly can help you earn more money.
And you actually touched upon something I want to ask next to you, Eduardo, is the crucial element of data cleaning. And if you can talk us a bit through that, because obviously, what are the best practices and how do you deal with that to get that sort of reliable data? Because by itself doesn't tell us much.
Yeah, agreed. So it's not only data cleaning, it's also data standardization, because you were talking about how difficult it is just in the UK to have a standard product. That's just UK, but if you look at Europe as a whole, right, which in Europe is comparable to the US in terms of population size and market size, we're nowhere near in terms of similar standardization. So in terms of gathering the data at, I would say, as granular as possible, and making sure that everything is comparable as well, it takes an enormous amount of time. And a lot of the data is publicly available, right? And thinking HESA for student housing and thinking about other types of data for the other asset classes, but just gathering it and then standardizing it is where a lot of the heavy lifting is important. So I would say those are the best practices. Using the data, figuring out how can we standardize it, making it comparable. That's probably where most of the work is allocated to.
And you actually touched, go for it, and then I have a follow-up.
I was just going to add in terms of what we've done at STR on that topic. Obviously, we have the data reporting guidelines, which are one global set of rules that every hotel that submits data to us has to follow. But something we've invested in significantly, certainly in the last 5 to 10 years, has been the integration and automation with PMSs, with RMSs, getting that data directly from source. When I started working with STR, gosh, now 18 plus years ago.
It was a different story.
It was a different story. And what we used to say to a hotel, we wanted them to work with us, is before your night auditor finishes their shift, or your night manager, they need to log into the system and submit how many rooms they sold and how much rooms revenue was generated. And now that's all done. We've worked significantly to have those integrations with the PMSs and RMSs, and from a data cleanliness perspective, I think that's been vitally important and beneficial.
I feel like, because we've done a project in our company in the senior living space, and I feel like that's where that industry from a data perspective is. It's a very lot of manual entry of what we found. When you look at the different classes, Alexei and Eduardo, is that what you see as well, that it's still quite a bit in infancy of getting that data?
Yeah, tremendously. It's still very manual, and it depends if you talk to a chain or an independent hotel provider. It's very different as well. So in terms of where are we in data advancements, I would say we're in the early innings. So to me, in the next 10 years is going to be a tremendous improvement across all asset classes.
And in the next 10 years, and I think last, we heard from Dr. Was it Nico? He's going to do another session fully on AI. So that's my question on that topic. How are AI and big data analytics changing the landscape of data collection and also analysis? So let's go for you, Richard, first.
Yes, I think in reality in the UK student market, very little at the moment. I think longer term, probably the way I would approach it is that it potentially devalues the value of public data. If it's a lot easier to, for a good example, rents. Everyone wants to benchmark rents. If you can have an AI tool that can do that across the whole industry relatively easily, then the ability to then sell that data or the value of that data is diminished, and that's where proprietary insights potentially has more value over time. I think just to go back on Thomas's point around trust, just to comment on that quickly as well, that's certainly an issue in the student market. Mm-hmm. The UK student market in particular is still relatively fragmented. There are some big players, but there's a huge long tail as well. So there is a reluctance not from everybody, but some of the bigger players to give up information because they are perceived to be giving up more than they're getting in return. That is changing, but that will take time. But that's certainly still a challenge as well.
Eduardo, I think you had a viewpoint on the AI piece and what are the limitations and how useful that is, because you're working a little bit on that.
Yeah, I would say,
Dabbling in it.
Yeah, no one really knows where AI is going to be in a couple of years. I think it's very complicated, but what we can say is, at least how the LLMs are working, is you can gather and retrieve data from a universe that's available, right? And my question is, where is that universe, and how clean it is, and how much can we use it for? So AI is going to help us certainly with the process of doing that, but also just generating or understanding which data is relevant for which asset class is also work, right? And I think at some point you can be overwhelmed by the amount of data that's out there. And I think
at some point, I think already.
Right? Yeah. And so understanding what's relevant versus what's not relevant, and for example, underwriting an asset class or a property or a portfolio and looking at, do you really need 100 different data points, or you can focus on those 5 data points here, and how clean are they, and how relevant are they? And I think that's where AI is going to be helpful, but I don't think it's going to be the full answer.
I think just to add, I guess to be a bit more contradictory, AI gets talked about all the time. Every panel there's AI something. The reality is, particularly when you look at things like PMS systems, a lot of it's just, I say basic, but it's just algorithms. It's not necessarily what I would classify as true AI. So if you can implement automations into your PMS system, you'll get benefit. Are you being sold an AI story because it's the sexy thing of the month? Yeah. Potentially, and actually it's not really. So I think that's just worth bearing in mind.
Well, because we kind of stopped talking about blockchain now, so I think that's to that. And I just see that Muse is up there on the sponsors, and they're working on something called the chat box, which takes that customer data and gives you just the points of checking in and making sure that you just ask the relevant questions. So I think that's where the sort of AI comes in as an actual assistance. Alexei, over to you. One of the statements, the statement I asked you is the lack of data on the emerging sectors gives an opportunity to investors. So can you elaborate on that?
Sure. I think, well, I'll start with the traditional asset classes. So for traditional asset classes, we've collected a lot of data. There are time series. In the UK, actually, it's not as good maybe as in the US, but still it's the best probably in Europe. And the challenge here, again, that European markets are quite fragmented, and it's more challenging when we talk about Europe. But the opportunity lies basically when we collect more and more data on the sector, the more and more it becomes a traditional sector. And we saw that with the logistics sector, that is now considered the proper traditional property sector. That wasn't the case before. And the opportunities in a way disappear because the more data we have, the more efficient the market is, and the more efficiency we have, the less easy it is to collect this superior return. So when we operate in an environment where we have very fragmented data or there is no data at all, the information asymmetries are higher, and consequently people who are able to take advantage of this situation are going to be able to achieve superior returns to traditional asset classes.
And Eduardo, a similar question to you of how should investors approach benchmarking and performance evaluation in data scarce environments? Because you look at a lot of different sectors that are still sort of emerging.
My answer to that is always triangulation, right? So if we look at the living space, for example, and we look at, okay, you got some student housing all the way to care homes, and in between you got multifamily, single family, and retirement housing. So if you look at the fundamentals of each asset class, it's different, but some of it is also similar, right? How do we value the PropCo element versus the OpCo element? And there's a lot of ways you can triangulate that. And you can look at, well, where are the OpCo trading at in the public market in equities or even in debt, right? You can look at, where's, if it's a BTR or a multifamily portfolio that traded, what was the cap rate on that? How should that differ between those two, for example, student housing and multifamily? What should be the right spread there? And to Alexei's point, is a very good point, in terms of alpha generation, as data gets more available, you're probably not going to have as much of alpha potential, for operational real estate or niche asset classes. So it's a tremendous opportunity, in the next, 5 to 10 years to get involved. But I would say in terms of benchmarking, the answer is really triangulation. And it's impossible to get to the true answer, but you can get to what...
Close enough.
You can get close enough. I think investors are doing that, and that's also part of our day job to do that. And triangulating listed market and private market together, and different asset classes as well. So that's in the early innings, that's really what I mean. That's where we are.
Thank you. I do want to leave some time for questions in the end. Thomas, next question to you. Kind of new, I would call it maybe new data or data that's going to be required now to report on, especially on the bigger hotel companies. New regulation coming in on all the sort of ESG credentials. What are you guys? What are you working on that front to start being able to pull that into your reporting as well?
So we've started doing some initial pilots with a couple of companies, Greenview being one of them, looking at effectively carbon emissions per occupied room. Seems to be the key metric that we're currently looking at, and we've been able to incorporate that into a few presentations, and it's had some real interest. We've sort of been comparing it to those at the lower end that are very carbon efficient. It's sort of 8 kgs of emissions per occupied room, and then those at the other end, it's 200 kg. So we've got an enormous variety in terms of that. So that's something we're looking at. We realise sustainability benchmarking is going to be pivotal from the investment community, of course, as well as the operators. But I think what's quite interesting about that area in future, I think it's something that the public are going to be looking at, the consumer's going to be looking at. Whereas we talk about occupancy and rates and RevPAR, etc., your average consumer isn't considering that when they're making their decisions around where they're going to stay. But I think as that sustainability data becomes more transparent, that we're absolutely going to see it not just from the side of the business that we work on, but the consumers are going to be looking at that more and more, which is an interesting kind of different aspect.
And Richard, what are you doing on the ESG front in terms of data collection, and what are you focusing on? What are the sort of the data points that that are important?
So I guess less on kind of benchmarking. I guess something we have done recently is actually provide the ability for students to search for specifically energy efficient properties. So everyone talks about students being climate aware, which we obviously all should be. Are they willing to actually pay for it? Is at the moment still the big unknown. So we're starting to collect data on that from students actively searching on the platform, so kind of watch this space. So I think that's one we'll just need to look at the data, which we'll be doing over the next probably 6 to 12 months. And it could be the case that people aren't prepared to pay a premium, which in itself could be interesting. But again, it's a little bit early in that stage, really.
And I think we see that on the F&B side all the time, that what consumers say they want is not what they're actually going to do. They say they want healthy, but it's still pizzas and burgers that are the #1 seller. So, you have the data there, you have the, you're interpreting it, but what is the actuality behind it?
And there will be some students who can afford to pay the
Absolutely.
premium, but equally, particularly the UK market, which, again, I won't get into affordability, but student is very expensive for a lot of the market, particularly domestic. And even if they wanted to, they just simply could not afford it. So again, we'll see what the data says when we have that.
Great. I want to open up more questions. We only have a couple of minutes left. I know there was some really great panels before with covering different sectors from an investor point of view. So you have the panel of data experts. Ask them the questions. Is there anyone have? There's one hand going up. Microphone is coming. This gentleman just here. Yeah, I think you can. You can try, but I think it's being recorded. So.
Thank you. My name is Ross from Operational Real Estate at JLL. I suppose my question is more around the standardization piece. And I know, Tom, you mentioned about, obviously, the global rules. And you've got all of you sitting on a panel now. And it sort of strikes me that if we're actually going to take things to the next level around standardization, how you or industry leaders need to sort of work much more closely together so we actually have a better form of standardized rules so that investors can make those decisions, because you're all each on a different pathway, representing student housing, healthcare, hotels, etc. But actually investors themselves are looking across the whole full board, and they need that information. And with hospitality is a good example of how 10 years ago that was really important to be able to sort of drive that investment going forward. So it sort of strikes me that we're now at a stage where we do need to bring that collaboration piece at a much higher level. So how would you sort of approach that?
Wants to take that one? Eduardo, go for it.
I fully agree with you. So information sharing and collaboration will be key in that process. I think when I look at the European data market, it feels to me very unconsolidated, across asset classes and especially also across geographies. Which to me, that could be an answer at some point. And then also sharing information, like in the US, it's a little bit more transparent, sharing data between brokers and data providers and investors as well. And it's a lot more collaborative than it is in Europe. I think for cultural reasons and historical reasons as well, but it doesn't have to be in the future. So I would say that those two things will probably happen. But I'm a believer in the consolidation in the data market, especially in Europe, because I don't see it in any other way. To bring that collaboration and to consolidate the data is a lot of synergy in terms of data infrastructure and putting everything together. So I agree with you.
I think to add on the student side, and I guess focusing on the property management software side particularly, that's very difficult. So if you have competing softwares, they are very reluctant to do that for obvious reasons. So I think it almost needs a collaboration of the actual underlying investor or end user to put pressure on those systems to say, look, we want the standardization to be X, Y, and Z. Whether the end provider of that system then listens and takes action, debatable, but it's definitely going to be a challenge, and there's no easy solution, unfortunately.
What kind of time for one more question? We have 1 minute remaining. Can't see really. Oh, there's Mikhail down here.
Thank you. So I think that we see in some sectors, quite a few industries, that an increased use of anthropological methods of social science to drive some of the insights that might be going into decision making. Maybe to overcome some of the what you talked about, that if everybody has the same kind of data, it actually becomes less of a value strategically. Is that something you see at all? Because this is very different, I know, from what you've been talking about here, but it's sort of the driving, the thinking that will then drive the utilization of your data.
I fully agree. In terms of the data at some point will be commoditized, right, in the long term. It already is in certain sectors, right? And then the true value will come from the insights and the research and, what does it really mean? What does that mean in terms of long-term growth for rent, for example? What does it mean in terms of cap rates? How should you price this asset? And eventually, everything bubbles up into a risk-adjusted unlevered returns, right? Per asset class, per geography, per property, per platform. I think that's the true answer, and I think that the industry will get there. Because eventually it's always about assisting investors and telling them what to do and where to allocate money and whether that sector is more interesting of that one or that geography more interesting versus that one. And the data is just a tool, but the true value is in the insights. And I don't think we're going to get away from that. In my view, in the long term, that's where the value will be.
And I think that's a perfect note to end on. Data is just the tool. Thank you, everyone, and thank you to my panelists.